Hello everyone, welcome to Traders Tech Academy. In today's video, we'll explore 5 candlestick patterns every trader must know now. Before we jump into the patterns, let's quickly understand why candlestick patterns are so important. Candlesticks tell us the story of price. They show us the battle between buyers and sellers, the emotions in the market, and the signals of possible reversals or continuations. If you've ever looked at a chart and felt confused, don't worry, once you master these 5 patterns, you'll start to see the market in a whole new way. These patterns can help you spot opportunities early, avoid false signals, and trade with more confidence. So stick around till the end. First of all, we'll start with the doji. As you can see in the image on your screen, the doji has a very small or almost invisible body, with long wicks on either side. This shows market indecision. Neither buyers nor sellers are in full control. Now, how do we trade it? If this doji forms after a long uptrend, like you're seeing in the example, it means buyers are losing strength. Watch carefully. If the next candle turns bearish, it could be a good sell signal. On the other hand, if the doji forms after a downtrend, like in this second example image, it tells us sellers are running out of power. If the next candle is bullish, you can prepare for a possible buy opportunity. So, the doji is a warning sign. Look at the chart image, notice the pause and momentum, and always wait for confirmation before you trade. Next, let's talk about the bullish engulfing pattern. Looking at the image, you can see a small red candle followed by a much larger green candle that completely covers it. This tells us something important. Sellers were in control at first, but then buyers came in with strong momentum and completely took over. This usually happens at the end of a downtrend or during a pullback, and it signals that the market may start moving upward. If you see this pattern forming after a decline, like in the chart here, traders often look for a buy entry once the green candle closes. The larger the engulfing candle compared to the red one, the stronger the signal usually is. So remember, a bullish engulfing is the market's way of showing that buyers are back in charge. Now let's quickly look at the opposite, the bearish engulfing. Here, you can see a small green candle, followed by a large red candle that completely engulfs it. This means buyers tried to push up, but sellers stepped in with more strength and took full control. This often appears after an uptrend and warns of a possible downward move. If the next candles confirm the selling pressure, traders usually prepare for a sell entry. So, whether bullish or bearish, the engulfing pattern is all about one side overpowering the other. These candlestick patterns are the foundation of technical trading. Master them, and you'll read the market with more confidence. Which pattern do you use the most? Comment below. And don't forget to like, subscribe, and hit the bell icon for more Forex and tech insights here at Traders Tech Academy. Thanks for watching. First of all, we'll start with the doji. As you can see in the image on your screen, the doji has a very small or almost invisible body, with long wicks on either side. This shows market indecision. Neither buyers nor sellers are in full control. Now, how do we trade it? If this doji forms after a long uptrend, like you're seeing in the example, it means buyers are losing strength.